With interest rates near zero, where can you find value in a low to no yield environment? Joining us now is Eric Sprott, CEO and CIO at Sprott Asset Management. His main hedge fund has a long, short equity strategy with $10 billion in assets. Over 80% of his fund is allocated in precious metals. And is there anyone that likes QE3 more than you, Eric?
I don't think anybody has quite the concentration that we have, Joe. But we're happy to have it, by the way.
Yeah, happy to have the concentration and happy to have QE3. At this point, do you ever take off some positions when you've gotten what you wanted? Haven't you gotten most of what you wanted already? And aren't you thinking about maybe standing to the side, or no?
Well, Joe, it's interesting. I go back to the reason I got into gold was in 2000. And at that time, there was some wonderful work done on the supply-demand market by a guy named Frank Veneroso. And he basically suggested there would be a shortage of physical silver in that year. And he wrote a book called the 1998 Gold Book. And because the NASDAQ had gone down, and we ran then long-only funds, I thought, well, where can we kind of hide out here? And I thought gold was the obvious answer, and precious metals generally. And you might be surprised to realize that the gold stocks since the 2000 bottom are up something like 1,500%. Gold is up 600%. And in a way, I call it the great wealth redistribution, because those who have invested in gold and silver have prospered quite nicely. To your question whether I want to stay with the trade, the reason I would stay with the trade, and you mentioned QE3, I never would have imagined when I got involved in gold that I would have the benefit of kind of irresponsible money printing, bank runs that are ongoing, as we've witnessed in various countries in Europe. And those two ingredients, along with the QE3, which has been announced, I think will be a huge tailwind for gold and other precious metals to go higher.
You also point out that central banks save the big banks, and that the financial system at this point, in your view, it might have been a temporary save, right? I mean, we still have a lot of risk that could come in the next few years, and gold answers your need for covering your strategy there, right?
Sure. Well, I go back to, I think one of the fundamental problems we faced in the last decade was the over-leveraging of the banks, which culminated in the failure of Lehman Brothers, and essentially the failure of many other companies, but they weren't allowed or weren't forced to liquidate. Lehman was the one time that someone's been forced to liquidate, and we saw what nearly happened as a result of it. We've had many other companies that one way or another were either taken over, bailed out, Fannie, Freddie, AIG, various banks around the world, the Spanish banks, the Greek banks. Now we do it with governments. And I think all of those things suggest that the financial system is quite destabilized. And I agree with Governor Plosser of the Fed that QE3 is not likely to work, just as QE1 and QE2 didn't work. When we look back at where we were and where we are, and we've had all this printing and all this deficit creation, and we really have accomplished nothing. In fact, we've gone into reverse in terms of job losses and numbers of homes sold in the year and cars sold in the year. So I don't see the QE3 as being substantive in terms of helping the economy.
Eric, it's Neil Kashkari. As a big gold investor, how do you think about the future of inflation? At PIMCO, we're always debating, is the future 3% inflation? Is it 4% inflation? With all this money printing in the U.S. and in Europe, there's a risk it's higher than that. Do you have a view?
Sure. Well, Neil, thank you for the question, and I find it rather interesting. I read Bill Gross's articles, and I could see, going back to May, that looked like Bill was shifting his stance somewhat when he, in that May article, suggested, maybe real assets are a better investment, and subsequently he said, well, he wasn't sure about stocks, and he wasn't sure about bonds, and, he's tweeted that maybe gold is a buy. And I think that inflation is likely to heat up. I think it's continually underreported. For the average person in the 99%, I don't think they believe for 1 second that inflation is 2%. And I think that as incomes aren't going up by that much, the whole 99% is under extreme pressure here. I think it creates more stress on governments and the banking system ultimately. And you want to have your your assets in something that's real, that can benefit by the debasement of currencies that's basically going on in all the developed world's central banks.
Larry?
The real question is timing. When do you think this is all going to come apart? I mean, the end game has got to be that you can't print money to get yourself out of a problem. But you can print money for quite a while. So is this going to go on for 1 year, 2 years, 6 months, or 10 years?
Yeah. Well, it's a great question. And when you ask the question, when do you think it's going to fall apart? I mean, I probably would have thought it would have fallen apart many years ago. But I never would have imagined that we would have bought into money printing. I mean, it just seems rather extreme to me that as investors we accept it as a palliative to the situation, which it certainly is not. So we can keep the markets buoyed. I think Chairman Bernanke basically measures himself by how he deals with the stock market and how he deals with the housing market. They have been kept up here by the hope that something's going to happen. But I think when you review the results of QE1 and QE2, post QE1 and 2, you realize that the market gets into a bit of a funk. Maybe we're in that funk here right now, that we kind of have come to grips with the fact that, yes, it's been announced, but maybe it won't do anything, because most of what's being done is to help the financial system, not necessarily the man on the street.
We talked about some dire stuff earlier, Eric. You were not predicting that, but I guess there's a certain probability to some really frightening things happening within the next 10, 15 years, I guess.
Well, Joe, I mean, I would say there's been frightening things happening for quite a while here. I mean
really frightening. Like we're used to, we don't worry about shelter that much anymore, food that much, safety that much. We have a society that we think can't go back to, decades ago, and maybe sometimes we assume we can go to the supermarket and buy all the food we want.
Right. Well, quite frankly, I don't often go there. I mean, it's that it's a worry, and I'm more interested in the investment field and what we do about it as investors.
Yeah. Well, hopefully you'll be able to go buy with the money you make. Hopefully, you'll be able to go buy a store that actually has those things, and not get killed on the way to the store. I see what you're saying. There's a time and place for that. But with gold bugs, we always got to ask that question, because I know you guys all got the holes in the backyard and all the bottled water and everything. So I know you're ready if something does happen, right?
Well, I think you have to be prepared for reality, and and when we see what's going on in the world, I mean, one can hardly argue that prudence is very much warranted here.
I made the mistake of watching The Road with Viggo Mortensen, and I'm petrified. I'm going to go take karate and carry around about a gun and $2,000 worth of gold everywhere I go. Eric, thank you. I appreciate it.